Could the Bitcoin price bottom be at $114,755? Data hints at a potential reversal. Bitcoin's dramatic plunge to an 11-day low has sparked intense debate among investors. But several key indicators suggest the downturn might be short-lived. On Monday, Bitcoin DT dipped to $114,755, leading many to question whether the record high seen earlier in the week marked the end of the current bull run. However, a closer look at the data reveals four distinct signals that indicate the correction could be temporary, with Bitcoin poised to recover and potentially surpass the $120,000 mark. 1. Option skew shows contained fear. The Bitcoin auction skew, a metric that measures the cost of insurance against price drops, reached its highest level in 4 months. This spike in the skew indicates a sudden surge in fear among investors. Typically, the skew should fluctuate between -6% and +6%. When the demand for protective put options rises, the skew moves above this neutral range, signaling increased caution. Conversely, during periods of fear of missing out, FOMO, the skew dips below the neutral band. Historical data supports the idea that such spikes in the skew often precede significant rallies. For instance, on August 5th, a similar jump in the skew was followed by a $9,657 increase in Bitcoin's price over 6 days. Similarly, when Bitcoin plummeted to $74,587 on April 9th, the skew hit 13%, setting the stage for a double bottom and an $11,474 recovery within 4 days. 2. Spot BTC ETF flows remain stable. Some investors are concerned that outflows from spot Bitcoin exchange-traded funds, ETFs, could intensify the downward pressure. However, this concern may be overblown, despite the end of a 7-day inflow streak on Friday. The impact of ETF outflows has been relatively minimal. From July 31st to August 5th, ETFs experienced $1.45 billion in net outflows, resulting in only a 6% correction to $112,000. Given that the spot Bitcoin ETF market is valued at $152 billion, a 1% change in inflows or outflows over a short period is considered normal. The recent lower volatility in Bitcoin's price also suggests that liquidity remains robust enough to handle significant ETF redemptions. It's worth noting that the last time Bitcoin experienced a 12% movement within 72 hours was on April 7th. 3. Top traders maintain bullish stance. The positions of top traders on platforms like OKX and Binance provide valuable insights into the sentiment of professional investors. Despite the recent price drop, top traders have not significantly reduced their long positions. This data encompasses spot, margin, and futures markets, offering a comprehensive view of the market's dynamics. While there was a minor reduction in long positions between Thursday and Friday, the long-to-short ratio has since stabilized. Some might argue that these traders are hesitant to buy the dip at $115,000, but it's equally plausible that they are waiting for a potential retest of the $112,000 support level before committing more capital. 4. Stablecoin demand in China reflects mild concern. The demand for stablecoins, particularly in China, can offer additional context. Strong retail-driven activity typically causes stablecoins to trade at a 2% premium against the official US dollar rate. Conversely, a discount of more than 0.5% often indicates fear, as traders look to exit the crypto market. Currently, Tether USDT trades at a 0.8% discount in China, suggesting a mild pressure to leave the crypto market. However, this figure has remained stable since Friday evening, indicating that sentiment has not worsened. Conclusion: when considering the option skew, ETF flows, top trader positioning, and stablecoin demand, it appears that Bitcoin's recent pullback is likely a temporary setback. The data points to $114,755 as a potential bottom for this correction, with the possibility of a rebound above $120,000. But here's where it gets controversial. While these indicators are promising, the crypto market is notoriously unpredictable. What do you think? Is this the bottom, or should we brace for further declines? Share your thoughts in the comments below. This article is for general information purposes and is not intended to be and should not be taken as legal or investment advice. The views, thoughts, and opinions expressed here are the author's alone and do not necessarily reflect or represent the views and opinions of Cointelegraph.